story that is breaking this evening. Tata Motors will separate its commercial and passenger vehicle business into two separate listed entities, identical shareholding for those who are current shareholders of Tata Motors. As we've been telling you, this was widely anticipated, but there was no timeline that was actually given by the board of Tata Motors or by the management in terms of when they intended to do this. But it is part of the process of value unlocking. Sonia standing by now with more details. Sonia, many thanks for joining us. So three separate entities now to be demerged from the erstwhile Tata Motors.
Oh, absolutely. And, you were mentioning how this was something that the street was anticipating. I think in every single analyst call, this was the question that was posed to the management. When would they go about demerging into separate entities? It's because, there are no synergies between the passenger vehicle and the commercial vehicle business. They are two separate businesses and they are seeing two separate growth trajectories. So the logical conclusion was to demerge these entities into separate verticals, separate businesses, so that shareholders can benefit from the growth path of different entities and choose which business they want to invest into. At that time, of course, the management had no timeline in mind, but now they have said that they will demerge it into two separate listed companies. The CV business will include its related investments, and the passenger vehicle business will include the passenger vehicle business, electric vehicles, Jaguar Land Rover, and related investments in another entity as well. Now, the demerger will be implemented through an NCLT scheme of arrangement, but the important part to remember is that all shareholders of the company will continue to have identical shareholdings in both the listed entities. And they've also spoken about how the demerger is a logical progression because of limited synergies between the commercial vehicle and passenger vehicle businesses, and will help them pursue respective growth strategies. Now, it's important to understand, of course, in terms of a timeline, they've said that the demerger could take about 12 to 15 months to come through, and it will not have any adverse impact on employees, customers, business partners, etc. I think the chairman, N. Chandra, ever since he came on board, has been talking about how he wants to capitalize on opportunities in different businesses and enhance value for shareholders. And that is the primary reason the stock has gone from, in the last 3 years, the stock has gone from 100 to almost 1,000. We are sitting at a doubling of the Tata Motors stock in the last 1 year. That is because the company has done a lot of good work in A, improving the balance sheet, B, improving the businesses, especially the passenger vehicle business. They have come out with a guidance of turning free cash flow positive, which they've met, and now this. So the demerger of the two entities into separate listed entities is something that was I think the last step to create value for shareholders, and it's something that has come through. So it is definitely a win-win situation, Shireen, for the Tata Motors shareholders.
Just hang in there. Let me bring in Prakash Diwan to the conversation as well for a quick reaction. Prakash, many thanks for joining us. As Sonia was pointing out, an effort to unlock value. Tata Motors board today approving the decision to demerge into two, the passenger vehicle entity as well as the commercial vehicle entity. And of course, the PV side will house electric cars as well as JLR. Prakash, what does this mean and how do you read this decision?
So, Shireen, I think this is absolutely a very, very smart thing to look at doing, and very timely. And I'll tell you why I say that. First and foremost, apart from the fact that both these businesses need a very different mindset, this kind of a separation gets them to make a 2 + 2 is 5 kind of a growth. The agility that it gives and all that. But I'll tell you from a timing perspective, Tata Motors has realized that they found their mojo back on the PV side after the new platform of Harrier and Safari and Punch and all of these new launches that you see on the road. Now, electric vehicles is another added portfolio, slice of the portfolio. And, of course, you have the roaring JLR success altogether. So, if you look at the PV growth rates, they are far more superior to what the CV cycle is representing right now. We've seen numbers from Eicher, Ashok Leyland, including Tata Motors. They have been tepid because the industry is taking time to consolidate and kind of reset itself with a different configuration of products and all of that. Whereas the passenger car is very competitive, is growing faster. The vendor network that they would need to create is so different, and Remember, you sell PVs in much more different geographies than CVs. You cannot have showrooms which can coexist and do things, with an overlap. So this makes for great sense, business sense to segregate. This was something which was talked about 2 years back, I remember, and there were a lot of questions asked around that time, and they didn't have a response to it. But I think now they know that the PV segment is going to be great on a standalone basis to be able to stand on its feet and gallop. So I think this is a precursor to the balance sheet becoming net debt free, which they promised by March, which is just around the corner. So if that were to happen, and then you have in 12 months or 15 months this going through, it will be a very different animal. Both of them will get different PE multiples. You can choose what you want to put your money into. And because of that, I think the PV segment will get, the business will get a far higher multiple, and there'll be a lot of value creation from that perspective.
Absolutely. Prakash, hi, this is Sonia here. I just want to add to that point, right? A lot of analysts have spoken about how Tata Motors spin-off in the electric vehicle business is setting the path for establishing an independent supply chain for EVs and eventually capturing a larger market share in the electric vehicle space as well. And we have spoken about in the past as well about how they are on track to do that with the kind of growth that they've seen in EVs in the last many weeks and months. So from a shareholder perspective, I want to understand that share price is almost 1,000 rupees now. It's seen a very big rally. From here, what kind of incremental upside do you see? And given that there will be now two separate listed entities, how does it really work from a shareholder perspective?
So that's the tricky part. You end up getting, let's say, two separate shares of two separate businesses. Which one do you hold, and whether you hold both of them? The whole thing is going to be, Sonia, as you rightly said, where each of these separate businesses stand from a evolutionary standpoint. So for example, the PV side is now getting more and more deeper into the electric segment. And you see the strategy is to start getting electric variants of the smaller models and the lower price points where the variants have started coming, right? They started with the Nexon, they've gone into Punch, they're talking about even a smaller car which could be far more affordable. And the commercial vehicle side is going to be focused very differently. So as a shareholder, if I really want to, in my portfolio, if I'm looking at the old economy to do well, commercial vehicles to do well, buses to do well, then I have Tata Motors CV as my play. Whereas if I am very convinced that Tata Motors has the right to win over the M&Ms and Marutis of the world, then I need to buy that or be invested in that stock. So it gives very clear dimensions to your portfolio allocations, right? And this will be absolutely welcomed by the institutional investors, because some of them are very averse to buying something which is composite. And Maruti is always, for example, just to give you an anecdotal thing, Maruti's had higher premiums on the PE multiples because it's a pure PV play, and you know that, whereas M&M had tractors along with it, a part of CVs. Now Tata Motors also had CVs and PVs and EVs. So you start getting more and more well-defined to be able to deserve a slightly richer premium. So for shareholders, it's going to be great value creation. I would, of course, wait to see, in terms of how the business pans out after 12 months when it's closer to the demerger. But it's absolutely going to be positive to look forward to this. And on the stock, we've been talking about 1,000 rupees when it was 700 rupees. And of course, I need to get my bet win from Nigel on that. But from the 1,000 plus to another 25% of an upside in the next couple of years, in the next couple of quarters, is bound to happen because of the news on the deleveraging. So once that deleveraging news comes, people will start allocating more capital to it in anticipation of this particular potential development of the next year and a half.
Oh, absolutely. And, I think this is a great move even from getting investor perspective, right? Getting funds into the company. So any foreign interest now will come solely into the growing EV business or the growing commercial vehicle business. So there is a lot of clarity on where the investors can put in their money. So, for example, Tata Motors is focusing on expanding the electric vehicle business. They currently have 75% market share in the EV space. They're focusing on expanding there. Now, with this demerger, they have a separate listed entity, which is passenger vehicles, which houses EVs. So when they invite foreign interest or more money, perhaps, there could be more clarity there. But Shireen, over to you.
Well, yes, Sonia, just hang in there. We've also got Deven and Parikshit with us. Deven, many thanks for joining us. Prakash was telling us how he believes that this is going to be a win-win and unlocks value potentially in light of this development. Deven, your first reaction to the news that's just come in from Tata Motors.
Hi, Shirin. Well, I believe that I think if I have to look at this from 40,000 feet, passenger vehicle portfolio, you have domestic passenger vehicle, which is ICE portfolio, then you have EV portfolio, and you also have the JLR portfolio. So these three portfolios remain unique portfolio positions, one global footprint and second, I think, which more specifically India footprint. Individually, I think these companies, they make more sense when they have to focus on expanding the footprint across. Because cross-leveraging of the platform, etc., will happen sooner. And at the same time, I think having some kind of inorganic growth proposition stroke partnership tie-up in passenger vehicle, I think could possibly become a big reality if I think this portfolio is separated out of commercial vehicles. On the other side, the commercial vehicle portfolio is again, I think, suggesting that it is going to be a larger gameplay. One or two reasons. On one side, India as a country is expanding big time into the infrastructure. So the demand for the new commercial vehicle is expanding. On the other side, the industry is basically, I think, significantly ramping up, including the PLI schemes, which is again putting across larger thrust on higher amount of demand for commercial vehicles. Along with the new roads getting constructed, the logistic connectivity is also going to put further demand equation into the commercial vehicle. And last but not the least, I think one which is sitting surprisingly inside is the scrappage vehicle policy, which is going to generate at least 2.5 lakh new commercial vehicle demand going forward. So it does make sense to segregate both these portfolios, and instead of keeping them as one company, I think give them individual attention, and I think give individual amount of, I think, growth program to both these companies. So fundamentally, it looks, I think, extremely promising. Maybe I think it's a first reaction, so numbers will have to follow hereafter. But I believe that I think extremely positive way of, I think, going ahead with this particular subject.
Yes, positive, and as you pointed out, and Prakash was also alluding to that, the possibility of getting investors on board who want to be part of specific businesses, and perhaps that is the attempt, especially on the passenger vehicle side. Abhishek Gaushinde, Deputy Vice President Reset at Sharekhan by BNP Paribas, also with us. Abhishek, many thanks for joining us here. Your read on the decision by Tata Motors to demerge the commercial vehicle business and the passenger vehicle business into two separate listed entities.
Yes. So broadly, what we can say that although on a legal perspective, company has been demerging both the businesses now, but since the company has separated that PV business in an individual subsidiary, the street has been valuing individual business on their own capacity. So in terms of SOTP valuations or value unlocking kind of a thing, that would not be there so significant, but it will give an individual investors an opportunity to play with an kind of independence to play with an individual company as per the choice of their portfolio and their assessment of individual business. Say, for example, if you are expecting that CV segment may see a kind of a moderation in the coming years and the PV may perform better, then you can play with the PV cycle or vice versa in the upcoming cycle.
Yes, that does give that flexibility, but Parikshit also with us. Parikshit, anything more that you've been able to glean from the management?
Well, we have been speaking to our sources, and one thing is for sure, they're saying that for a long time now, Tata Motors has been trying to get the core right. Now, this is coming at a time when they are a strong number one in the commercial vehicle space. Last month, their market share was a strong 38%. If you speak about passenger vehicles, including electric vehicles in total, they were a number 3, but their market share is almost identical that to Hyundai. So if Hyundai was 13.4, then you had Tata Motors at 13.1. This is right after Maruti Suzuki. So Tata Motors has been growing its portfolio in the market. Now, what sources also tell us that if we look at a global practice, no company has passenger vehicles and commercial vehicles under one single entity. So this was in a way to divide the businesses into separate entities and allow both businesses, commercial vehicles and passenger vehicles, to concentrate on what they're really good at and have better valuations in future. This is also coming at a time when Tata Motors' share in terms of electric vehicles is increasing on a month-on basis. They are selling close to 5,400 electric vehicles per month. They have more than 70% market share in electric vehicles. And going forward, they believe that it will create great synergy within the group if they have the traditional ICE vehicle business, JLR, electric vehicles and automobile software all under one business. When you have commercial vehicles, that can have a different sort of synergy, but it does not make sense to have both businesses together. We are seeing a strong investment being made by Tata Motors in increasing capacity, and it seems that all of this is moving in line with that direction that they had somehow revealed way back in 2022 when they subsidiarized both the PV and the EV business. What sources also telling us that this is a logical step and had been in the works for a few years.
Absolutely, and that was the point that was being made there by our guests as well, that this is a part of that process of subsidiarization, and perhaps hence we may not see an immediate sort of unlocking of value because that had already been factored in, and this is now part of that process which had been a work in progress. Quick final comments. Prakash, I'll start by asking you, what's the take now as far as the stock is concerned? Devin, what's the take on the stock from here on?
Shirin, we continue to hold the buy call on this particular company, and we will continue to remain so, largely because of the fact that I think this entire portfolio of commercial vehicle, we believe, is going to be value unlocking proposition for investors. And on the other side, the passenger vehicle portfolio, which is now resulting into the profit-making business, I believe that I think it has a long way to go from here on. So I think they have restructured significantly the passenger vehicle portfolio from the cost perspective as well. There would be, I think, unlocking proposition there too. I wouldn't be surprised, I think, if JLR is getting combined into the passenger vehicle while offering this particular company to the new investors in the marketplace separately. So I think that would be, I think, another value unlocking proposition that we are talking about. Various possibilities. I think the numbers, as I said, I think will work out. But the fact remains that I think good possibilities to good value unlocking from both these businesses.
Abhishek, let me ask you where Devin just left off in terms of what possibilities you believe the company may explore from here on, and more importantly, what will investors be watching out for?
See, broadly, as I have already said, that we are not expecting a significant fundamental unlocking just based on the basis of this process. But yes, we are positive on Tata Motors, and considering that all of its business are doing currently well and have a proper and independent capital allocation along with a business plan. So we are positive on both of its business, CV, PVs, and this JLR business, coupled with the correction in the net automotive debt is auguring well for all the business. So we are, and considering that Tata Motor has been in our top pick in the automobile.
Abhishek, many thanks for joining us. Sonia, before we wrap, a quick word in from you.
Yes, so I just want to make one point. So, the EV business is something which is growing at a very fast pace. They plan to invest $2 billion into the EV business by 2026. They are looking to launch 10 new electric vehicles, build a dedicated BEV architecture. And as we know, the EV business has delivered market-beating growth, is a market leader. So the main, reason for this demerger is to support these high-growth businesses so that it unlocks value for shareholders. So I think it's a big win-win for the company as well as for the shareholders. Back to you.
All right, Sonia, Abhishek, Devin, Prakash and Parikshit, many thanks for joining us with your take on what this means for shareholders as well as the possibilities that Tata Motors could unlock and explore going forward. That's the stock for you and where it closed today. We will, of course, have to wait to see how it reacts to the developments that have come in post-market closing. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.